So, that to what level can China increase that percentage? I mean, and if it comes out to be true, what percentage of decrease in iron ore demand of China can we foresee? Can we convert this truth as an important pricing pressure on iron ore? Or otherwise, if China exports more scrap, also can we see it as a pressure on scrap prices?
Yes.
That's a very long question, but in the long run, how can we see the balance? What do you think?
Sure. It's anybody's guess what China will do in the end, and we've heard different forecasts of production out of China. I think some are saying that China has reached its peak and may not go up higher. Our forecast at even a little bit over 1 billion tons is only a 2.5% annual growth rate. And we think China will be able to do that. But if this gap in the price of iron ore and scrap remains, or at least remains to any meaningful degree, there won't be an incentive for China to switch to scrap other than, as I said, they'll be generating significantly more scrap each year through the next 10 years and obviously beyond that as well. And that's why I concentrated more on the charge in BOFs of scrap as a determining factor, because for each 1 percentage point increase in the BOF charge, and our experience is, it's difficult to say, but our experience is that the average Chinese BOF integrated steel operating is using between 11 and 13% of its charge as scrap. So we go at the low end of that range. But again, for every 1 percentage point increase, that represents right now 8 million tons of scrap. And by the end of the decade, if we're up to 1.105 billion or 1.2 billion, that means 10 to 12 million tons of scrap. That's almost half of what Turkey, the world's largest scrap importer, imports, and just by a 1 percentage point shift in BOF charge mix.
Okay. I understand that a 1% increase in China corresponds to yes,
it's like
high
anything.
figures.
In China, anything, a minor move by
Right.
China in any regard
Right.
creates a tidal wave around the world.
Okay. Yeah. Using scrap, they say, is more energy efficient, energy effective, also cost effective, they say, for the steel makers. And do you think the Chinese government will support recycling in China?
That's a significant problem now, in that the Chinese have a very inefficient scrap collections. And contrary to what a lot of people believe, our experience is that China already is in a moderate excess scrap position. It's not something that's going to be, that's going to be worse and worse over time, or larger and larger, but they're already in that. There just is no efficient collection, processing, and market area for that, because it's not needed right now. And I think as they get going, that would have to have cooperation in some way from the Chinese government. But the one thing that I am always concerned about with the Chinese electric arc is just the price of electricity is so high that that's another factor that might keep them from not pushing too many more. I mean, we think the share could go up from 10 to 11, but not much more than that.
Maybe the iron ore miners and steel makers may wish that China's old cars and washing machines just rust away. Yes?
Yes.
So, Mrs. Alemdar, iron ore prices are falling down sharply, plummeting, and demand is easing. But miners are digging up more and more iron ore. What do you think is the reason?
I think it is to some extent not very much correct to say that they are digging more and more, but they dig before more and more. And as I explained in my presentation, most of the additions come last year and the beginning of this year. Therefore, most of these additions were coming from the three producers. Those three producers have the advantage of low costs. Therefore, they keep on sending because their costs are lower. But when you look to the rest of the producers, I think they are kind of in a waiting stage because everybody up until now, the belief was it will turn. And therefore, if it turned, then it is not, if you shut down, it's not so easy to open. Therefore, the others are waiting really. And there's also one more thing that just make it more harder to stop because there is some take or pay agreements, especially transportation, railways. Therefore, it's not really very easy to push the button and stop. But at the end, if the prices stay at those levels, some industries, some producers will stop. That's the reality. That's what we see in coal part. Therefore, I expect such closures and displacements, but it will take time. It's not that easy.
Okay. I also saw in your presentation that the present prices are above, you said break-even price for the 30% of the
It is, this is it is not really very much important, the percentage itself, but how many producers have it. Really, it is, we cannot just extend it say that as a market reality that iron ore is so cheap to produce, everywhere will be producing and selling. Therefore, yes, the bigger ones will use this power and try to increase their production because some of the cost reductions will come from production increases. Therefore, they have no motive to stop. But the rest will really, they will wait, but I don't know up until when.
The companies are also betting that the lower prices, say, could force higher cost competitors out of the market.
Yes.
Giving them more pricing power in the long run.
Yes.
So they can capture the negotiation power against you.
It will be still today's a buyer market, but tomorrow this change will make it to a seller's market, not only because the concentration of supply, is because also the supply will be in only two places, Australia and Brazil. Therefore, you know the winter conditions. When we have hard winter and hard rains, the prices go up. Therefore, it brings another risk to the market, and therefore, at the end, I believe the industry will balance, but it will take time.
Okay. Mr. Plummer, in your presentation, you're claiming that the self-sufficiency of scrap importing countries will grow in time. In that sense, for example, being the largest scrap importer of the world, Turkey's domestic scrap consumption increased to 33% in 10 years. My question is, maybe we saw in your presentation, but I'm asking it again. My question is, what do you think is a reasonable level for self-sufficiency for a country? Will it be achieved by more and more scrap recycling or by shifting the raw materials used to more iron ore-based materials, such as DRI, MPR, HBI, let's say?
Right. I don't know if there's an optimal level. I think ideally you'd want all of your scrap sourced domestically, or most of it anyway. And I think right now Turkey is 45 to 50% self-sufficient today, and we think within 10 years we'll be somewhere in the 60 to 65%, almost two-thirds self-sufficient.
In 10 years, you say?
In 10 years. But as I pointed out in one of the charts, the idea of building, owning, and operating your own DRI and MPI plants, you have to really look into that carefully to make sure, do you have the iron ore below market price? Do you have natural gas below market price and locked in for a 20-year period like Nucor does in the United States, or DRI producers in Russia have, that sort of thing, because that, in the end, we think owning these operations, including owning scrap companies, is not necessarily a good strategy. As I showed, it can really dilute your earnings, and people feel comfortable and safe. I think there was a lot of concern, for example, in the U.S., that the Chinese steelmakers would come in and either buy up all the scrap or outright buy the scrap companies. And I think that fear led Nucor and Steel Dynamics to make huge, $1.5 billion to over $2 billion acquisitions. And you saw what that did to their earnings on average over the last 5 years. That alone cut their earnings in half.
So for the countries having a lot of electric arc furnace capacity, we have such options. I mean, bringing capacity in line with the scrap splice, switch to alternative iron units, iron ore-based materials, increase domestic recycling, maybe for China, I don't know, restrict exports of steel scrap, such things. But I had another question, but I think you answered it in the presentation. In electric arc furnace operation, can we replace all scrap by DRI? You said in the United States, Nucor is working to increase it to 60%. Now they're capable of using 30 or 40%.
For DRI, Nucor in the United States just 5 years ago couldn't physically charge more than 8% DRI into any heat. It now regularly charges over 40. We think it's just about within the next year or two to get up to 50% DRI charges regularly. And there are companies doing that in the Middle East, North Africa, Mexico. So it's not an issue, a limitation issue that way, just in practice with the products it makes and that sort of thing. And if you're going to go after markets like exposed automotive panels and things like that, at that point, you're going to probably have to charge as much as 80, 90% or more high-quality alternative irons, mostly pig iron, but in order to be able to get the quality to make these higher application steels.
But also you said, I think that depends, DRI usage depends on the price of the iron ore. For the countries that are importing iron ore, so it's not a good strategy, as I remember from your presentation, right?
Well, I think anywhere, unless you have one or both of the key factors, and that is domestic below market iron ore that you own and operate, or domestic low cost natural gas, doesn't make sense to build it. So you may as well buy it from other companies who have those advantages.
Okay. Mr. Alemdar, do you think that we can see a direct correlation with the iron ore prices in the path of scrap prices next year?
We try to build complex models to understand whether such correlations exist or not. Honestly speaking, with iron ore and the steel price in China or such kind of correlations, that you have high correlations. Yeah. But in terms of scrap, it doesn't really work that way. As I suggest, what is important there is U.S. steel industry, and U.S. steel industry kind of a closed market. Different from the rest of the world. Parities are very important. The Turkish steel industry was very important. This year, when the iron ore prices were decreasing, scrap prices were holding. It's because the steel industry in US was the prices were higher, and also in Turkey the prices were higher. Therefore, I think it is more right to say that scrap prices are more correlated with finished good prices. Yeah. But at the end, to a longer horizon, because they have the substitution effect, there is a balance, but not in the short term.
Also, they are both are coming from the same origin. Scrap is coming from iron also.
Yes.
So isn't that surprising?
It is like, I think the iron ore and the cost is different there.
Yeah.
In scrap, you can to some extent stop collecting, and this also availability also depends on this. But iron ore, it's a big mining investment. If you begin production, it's like being integrated steel mill. It's not easy to stop. Therefore, the production volume still be going to the market. I think that's the main difference.
Okay. Mr. Plummer, considering the drop in iron ore prices, 44% this year, and then another, you said 33% by the second half of 2015, according to your forecast, how do you forecast scrap prices at the end of 2015? What can be the bottom level?
Well, first of all, I would say our forecast for next year for iron ore is, and again, this would be the China CFR 62% Fe content, is 65. And we think at some point during 2015, the price will dip temporarily below 60. But there's a good chance it'll go into the 50. Temporarily, is what I mean, it's already in the high 60s right now, so that's not a big stretch. So I think that's our view for next year's 65. As Sevgi was saying, I think scrap is on a different, it's got different dynamics. I mean, you have, as she was saying, you have all the major 4 or 5 players pushing into the market very high volumes of ultra low cost, high quality capacity. In scrap, you don't have that. It operates on a totally different basis. And you do have peddlers, grassroots collectors of scrap who just at some point speculate. You know, they'll say, oh, well, I'll hold on to this for another year or so and it'll be worth twice as much as it's offering today. You don't have that in iron ore. So I think I'm encouraged that scrap pricing has been coming down. That was a challenge for this presentation, to try to deliver it early on, because each day and each week the price of both iron ore and scrap has been coming down, in some cases significantly within 1 week. So it's hard to tell. I think ultimately they're moving in the same direction and it'll come to some sort of balance, and this wide disadvantage for scrap versus iron ore is probably unsustainable in the medium and long term, but as Sevki is saying, I think it's could be a problem in the short term.
Yes, actually another thing in your presentation, that ratio thing, you said that's around 4.5, something like that for this year. But when we were talking in the office 2 days ago, I asked the guys, who invented this ratio thing? You said 3 must be a logical ratio. And I said, no, I changed my mind. I changed my mind because it does not seem logical. Because in the process, you see, you put electric arc furnace, you have conversion in electric arc furnace, 1 unit. And in the other, you buy iron ore, you have some operation in sintering plant, then you have some operation in the coking plant, you have another operation in the blast furnace, you produce molten iron, then you put them into basic oxygen furnace. You have 4 conversions. Mm-hmm. So there must be something. I mean, iron ore times something plus or minus the difference between the conversion costs. So I don't believe in that ratio thing. Mm-hmm. What do you say?
Okay. It's just a ratio. And you saw it's all over the map going back 20 years. So it's a difficult thing. I agree with Sevki that it's two related but significantly different markets. The dynamics, the collection, the production are totally different. And I think it's just luck of the draw how that pans out. We happen to be in a period where it's not pleasant for electric arc steel makers, but at some point in the next
Okay.
few years that could change.
So the time is up. We have 10, 15 minutes maximum, okay? Now? Okay. 2 questions then. All right, Mr. Plummer, you say that there will be around 100 million ton capacity increase in electric arc furnace in the next 10 years. So if the scrap and iron prices continue as it is now, what is the logic behind investing in electric arc furnaces?
Well, I think if one of my slides that I showed where I put electric arc production by country of those that are adding the most electric arc with simultaneous additions of DRI and MPI. So they're diluting that negative spread by locking into the iron ore side of the equation. And I think there are still advantages. I don't think that this gap that we're seeing in the raw material between the two negates electric arc steel production or the rationale for it. I mean, we're seeing in the U.S. significant new capacity coming online, India, elsewhere. It'll just be moderated, that disadvantage, by more DRI and MPI. And don't discount MPI. There are going to be a number of mini blast furnace or synthetic blast furnace operations that will be coming into the market as well as DRI.
Okay, other than that raw material costs, I mean, of course, electric arc furnaces have many advantages in operation. Okay, Mr. Alemdar. The usual method in iron ore contracts had been to fix the price yearly by many years. But some time ago, when was it? I don't know.
I think
the iron ore producers changed it to quarterly.
the change becomes in 2009 after the crisis.
2009.
Yes.
Okay, so after then, how did it continue? I don't know. Maybe something index-based. Maybe, I don't know, quarterly again. But you negotiate every quarter, maybe. I have no idea. But latest strategy of the iron ore producers, I mean, producing more and more, so it must be changed also. I mean, you can have easily yearly contracts. I mean, you have the power, I think.
I think
What do you say?
The pricing negotiations in iron ore changed in 2009, as I suggest, because 2008 was the sector, both mining and steel sector, learned a lot. Because at that time the prices were fixed, it was annual tonnages and annual contracts, and when the crisis happened in 2008, both industries suffered that. Therefore, it was not only the request of the mining companies, it was request of both parties, so that we should have quarterly price negotiations rather than yearly price fixed. This again changed in 2011, I guess, because before it was lagged quarter. A quarter, we price the existing quarter with the average of last quarter. But then at the end, what we understand is, especially when there is sharp price decreases, a lag in your raw material prices also happens your ability to give the steel price. The lag is too much. Therefore, steel industries, they are forced in mining industries for the existing quarter pricing. Therefore, I think now the industry is much more healthy, because whatever happens in the market in terms of price decreases in raw materials, it's much more easy to handle it. Also, when it's vice versa, when in terms of increase. The scrap was different because scrap was always spot-based. Therefore, they were much more easy, have the ability to reflect any price changes in their cost to the end prices of the steel. But this is, I think, the market brings itself. This is both parties' request.
It only depends on the market situation.
It depends on the market situation, yes.
Okay, the last question, Mr. Plummer. I want to come to a surprising slide in your presentation. We've talked for many years about the necessity of the acquisition of upstream facilities by steel plants. But now you show us this is not so, giving the examples of Steel Dynamics and Nucor. Why is that? I mean, their profits decreased.
Well, yeah, I mentioned my theory on why those two companies they paid over $1 billion, in one case over $2 billion, to buy scrap companies. And I think it was bought in large part out of fear that they would be blocked out of getting access to these to the scrap companies and their scrap generation by foreign steel companies, primarily China. It's just my theory, but I think in retrospect, what owning a scrap company does, and a lot of people don't realize, is that it doesn't give you a price advantage. Maybe once in a rare while during the course of the year, there might be some ability to do that. But what it does is it gives you the ability to hold lower inventory. So you never have to worry, are you going to be able to get it, and that sort of thing. But other than that, is that really worth spending $1.5 or $2 billion? I suppose it does still give comfort to that, but in the end, you see what happens. Their earnings for their shareholders, the rate of profit generation has essentially been cut in half from that.
Okay, so ladies and gentlemen, finally, we come to the end part of our panel. I would like to thank our experts for joining today, for this informative and interesting and also very sincere talk. Also, thanks to the audience for their patience.